Thanks, everyone. And as Roger indicated, in May of 2021, we were asked to take a look at the question of separateness of GSI from NCIGF. And what was really behind that on discussion was the concept of did this really effectively provide some insulation or for NCIGF from the potential liabilities that GSI would naturally generate in providing the sorts of services that it was intended to provide. So that's what really stood behind that. And so frankly, my first question was, how do we fit that question into a corporate legal construct? And started with the fact that both NCIGF and GSI are Illinois domicile entities. NCIGF not-for-profit, GSI for-profit. The law of the state of incorporation, or the domicile, is going to be the law that is going to impact these questions of corporate formalities. Is there protection between one corporation and another? So we started there, and then looked at the way that Illinois courts would approach the question of, have we in fact insulated the activities of one entity from another. And the framework that's used in Illinois and in many states is called the alter ego framework with regard to questions of what Roger referred to as the corporate veil. That's the idea that corporations, they are a creation of law and acts of humans, often referred to as a fiction, because they are not actually people, but they get the benefits, if you will, of personhood by virtue of what the law has created. And that personhood is described often in the corporate law context as a corporate veil around this fiction. And the question is, can this corporate veil that exists around this fictitious person be pierced? If it can, then the liabilities of one entity become the liabilities of the other. And effectively, we failed at what was attempted to be done when GSI was created. So the question fits in this corporate veil framework, and as I say, Illinois uses the alter ego concept. In short, that simply means, is there nothing real? Is there nothing there? Is there nothing real to the separateness of the two entities? So that's the basic framework that's established under Illinois law. And there's essentially two things, and they're on your screen, that must be established if one is going to pierce that corporate veil. First one, there is such a unity of interest and ownership that the separate personalities of the corporation and the individual, read that one as the other corporation, no longer exist. So the two persons, in this case we have two fictitious persons, two corporations, there is such a unity of interest and ownership, and there are therefore no separate personalities. That's one, and you initially hear that and you're like, well, maybe that's something to be a little worried about. Then we go to the second. Given the circumstances, if we stick to that fiction of the separate entity, would this result in a fraud? Would it promote injustice? Would it promote inequitable consequences? Let's go to the next slide, and I'll finish up on sort of the general conclusion that we reached. We did a number of things to analyze how GSI was set up and how it is separate and distinct from NCIGF. And by the way, my firm did not set up GSI, so I had no particular interest in this. And we followed basically the key elements in this alter ego analysis. These are reflected in these 4 bullet points, which became the keys to the conclusion. So this alter ego analysis under Illinois law has these 4 main tenets, and we tick through them. The first one NCIGF and GSI maintain separate corporate records and respect separate formalities in the way that they are governed and operated. So we looked at a number of corporate minutes, the way that the boards were set up, the way that the officers and the various employees were set up in order to establish that. So that looks at what we'll call the formalities piece. The second thing is look at the money. That's always going to matter. So are funds for NCGIF and GSI separately maintained? Do they have separate bank accounts? It's a rather straightforward thing, but if we're going to be in a situation where the corporate veil is pierced, often there's not even separate bank accounts. There's no distinguishment. Here there is. Third item is the entity that you're examining. In this case, we're examining GSI because it's the one that's controlled by NCIGF. Is it operated in a way that has sufficient capital? Well, how are you going to test for that? One way to test for that is, does it operate in such a way that it provides a surplus, even if that's a minimal surplus? And the answer here is yes. And so what does that suggest? That suggests that GSI must have enough capital to operate its business, otherwise it would consistently lose a significant amount of money. The final item that is relevant is, do the entities act as they would with third-party unrelated entities? And how would third-party unrelated entities act? You guys know this from your day-to-day. You tend to enter into written agreements with third-party unrelated entities if the two of you are going to do anything together. We don't just have a handshake and a nod. We don't just orally talk about what we're going to do and then go do it. We actually resolve it to writing in some sort of a contract, and harkening back to the last session, yes, we pay some lawyers something to make that happen. And then we have an agreement which is something that we would enter into with a third party, with an unrelated party. Well, in fact, NCIGF and GSI do have a number of agreements. There is a primary one, but a number of agreements between them that reflect the overall relationship between the two organizations in a way that is arm's length. I'll briefly say that while we came to our conclusion without requiring that anything be changed about the way that the entities are set up, we did make a number of recommendations, which a number of those were implemented, of ways that we might improve it, because you can have the right answer and you can still say there's room for improvement. So NCIGF and GSI were very much in favor of making some changes to improve, but I stress that those were not necessary for us to reach our conclusion on separateness.
GSI has 0 employees. How is that possible, you ask? So the way it works, and Michael can add some color commentary to what I'm about to say, but all the work done by GSI is done by GSI renting employees' time from NCIGF. So we keep very careful records. Nate here to my right keeps records on all the project work that he does, and some work is billable to outside clients, some work is charged to IT core services for NCIGF. And we have a careful system of allocation of costs for all of those things. But technically, no, GSI has no employees.
And I'll just expand on that a little to offer, this is amazingly common. Let's think of insurance companies. Almost every insurance company is not just a single entity. There are some that are, but most insurance companies have multiple entities in their families. And most of them, not all, but almost all of them, will have one entity that acts as the primary employer for all employees. Somehow, all of those other entities must get access to those employees in order to do things. It's the exact same way with GSI and NCIGF. One entity in a family group typically holds the employees, and then the way that it is supposed to work, and the insurance company example is a really good one because agreements between affiliates will typically need to be filed for insurance companies. And so almost every insurance company, in fact, does it the right way and has a written agreement, just like GSI and NCIGF do, which sets forth the basis upon which the entity that doesn't have any employees gets the services of employees from the common entity in the group that holds the employees.
GSI is owned by NCIGF 100%.
And that is also a typical arrangement, correct?
Yes, there's absolutely nothing uncommon. If I'm going to make reference once again to the insurance company, family of insurance companies example, many times a number of the companies in an insurance company holding system are 100% owned by a parent company. Not exclusively, but that is tremendously common.
We endeavor to make a profit, yes indeed. And where does it go? So as a for-profit entity, any profit that the organization makes is held, shows up on its balance sheet. And because it is owned by NCIGF, there is the opportunity for the board of directors of GSI at their discretion to eventually declare a dividend if they decide to do so. And then that dividend would flow back to the parent organization, NCIGF, which would help with operating expenses and be revenue for the not-for-profit entity that owns GSI. So GSI has separate contracts for things like our Microsoft Azure cloud service, anything like that we do externally. We do have separate contracts, and we pay those bills and sign those contracts as GSI, not as NCIGF.
And insurance coverage?
So as a wholly owned subsidiary of NCIGF, our insurance broker is fully aware and understanding of our structure and our relationship between all the entities, that we are the two entities. And yes, it does and it doesn't. It's part of the group, I guess you'd say. So we do have full liability, professional liability, cyber liability, all the coverages that we need as advised by our broker. So we do have adequate insurance for GSI.
And I'll just quickly note this again, and I'm going to refer to our insurance company group example. Very typical situation. Most organizations will go out and they will get their insurance typically at the parent or the primary operating entity level. And then all of the other affiliates are typically additional insureds on those policies. So very common.
So no, we have the same. And we're a small organization, small staff, a small team. So the security policies and procedures that we have for NCIGF are the exact same ones we use for GSI. At our size and scale, it would be kind of inefficient and weird to have separately maintained policies for everything, so we just have the same.
And if I may, I'll offer once again that I think this reflects a very typical approach for a family of companies. I would argue, number one, there is huge benefit in there being consistency among the policies and procedures that apply to all entities within a family of companies, and that typically drives having a single set of policies on something like security that would apply to all of them, unless and until we identify things that need to be specifically done differently at a particular subsidiary or affiliate. And so that's something that you're always on the lookout for. But the sort of difference or the change ought to be, in my view, and I think it's a reasonably accepted view, ought to be something that's driven by the uniqueness of a particular entity within a family of companies.
If you didn't already know this, this is our team today. We have a total of 6 IT professionals that work for NCIGF. They are NCIGF employees, but as I noted earlier, they kind of flex in between doing projects for GSI and doing NCIGF core services support work. The 4 primary occupations of that team are listed there on the slide. Insolvency data processing. That waxes and wanes, as you all know, over time. In times of slow insolvency data work, we're able to flex our team back over to working on improving and maintaining our core services, which are the MAPR and the SUD system. And if you were here yesterday and heard Roger's report, we have some exciting new developments on both of those fronts that we will be announcing in the next month or so. And then the team also provides UDS question and answer support and technical support on the UDS file format system.
So we've referenced this before. There is a primary services agreement between the two entities, and I alluded before to the fact that this is intended to set up the relationship the way that you would with an arm's length third party, someone who's not affiliated. So that's what you have is an agreement between the two parties, and it is, once again, I'll make this analogy to a group of insurance companies. It's set up in a very similar way where services can go both ways, and actually even more than services, one can provide the equivalent of space, so like a lease within the concept of the agreement, things like that. It is a way to set up a system where you have that arm's length agreement between the two, or in this case two, but potentially more companies if there were more, that allows one entity to do something for another and then get appropriately reimbursed or paid for that activity.
So I mentioned earlier that GSI doesn't have any employees, but it rents employees' time from NCIGF. It took me a moment to get my head around that concept, but it makes total sense to me now. You should all understand that the work done by GSI to maintain NCIGF core services is not marked up at all. There's no profit flowing from that part of our work into GSI. It's done on a cost allocation basis. So our labor plus an allocation of overhead is how we do that. Now, GSI does work for external clients and does work for some of the entities here in this room that are not considered IT core services. Things like our proxy voting app and our assessment tool and websites that we've done. And of course, all the insolvency data support work that we've done on a large scale. So those projects are billed at a marked up rate, just like we would do as a professional services firm for any other outside client. And that work does generate a net profit for GSI that is retained earnings and is available eventually, hopefully, to reinvest in GSI and also provide a dividend back to the parent company. So we do that work and mark that up, and then we do secure cloud hosting for some clients, and we do a little bit of a markup on that. And then, like I said, just to reiterate, the profits that GSI does earn from external clients and non-core work that it does for members goes to its retained earnings and is available for future use as either dividends or reinvestment into the business.
Now, I'll just add a couple of thoughts on that. One of the things that I do a lot of is counseling around governance. And the elements that are reflected here, if we look at it from the GSI standpoint, since this represents a significant amount of what allows GSI to operate as it's expected to operate, and it touches on the different kinds of services that GSI provides and the income or reimbursement that it gets to do those. I would argue that these are elements which the board of GSI is there to consider as to whether, and did when approving this original intercompany agreement, consider whether the approach taken on each of these different services is the right one, if it makes sense from their fiduciary perspective. And in my judgment, these are reasonable determinations, but ones that would be subject to a sort of a business judgment of a board in analyzing how they approach this.
So this is one of the really, I think, powerful things about how this relationship was constructed originally. It lets our team, in times of low insolvency work, it lets our team go back and work on the core services enhancements and updates that are needed. The SUDS system and the UDS data mapper are mature products, I would say. They've been out in use for quite a while, so we're not just trying to get those off the ground and launch them. So what's nice is we can accumulate a backlog of work and bugs and feature requests and things like that. And And then when our team has time, we can assign those projects to them to do. And so far for this year, 2023 first quarter, we've gotten a lot of progress done on those. Nate can talk about that a little bit here in a moment. But when the time comes, if there are needs on the GSI insolvency support front, the team will put those things on the shelf and work on that work, which is more critical and more pressing. So these three areas that you see on the slide are kind of where we flex back and forth. So we keep the team busy, we track everything that they do, we stay engaged, and we keep good notes so that when we do have to come back to something, it's not reorientation and ramp up time, it's try to pick up where we left off pretty quickly and move forward.
And I would offer this flexible model that's used within GSI sort of fits right with and works with the concept of within the two companies that form the group here, having the employees in one means you don't have to have double sets of employees that need to be fully occupied with the particular activities of each organization. So it's another level or layer of flexibility that's built into the system.
And the key to doing all of this and making it work well is the discipline that our team has and that we enforce on tracking their time spent on projects. So we have a pretty sophisticated time tracking system and a job tracking system, and that's what we use. Nate's nodding his head because we talk about it all the time. We make sure that we track our time accurately. So next I'd like to talk a little bit about the future of GSI. So as the company's evolved, it's in its 8th year now, or coming up on its 8th anniversary. Really the core competencies of the company are all about insolvency data management. And if you saw our little banner out there, we are going to try to promote the business a little bit more among the liquidation community. And we want to try to be the go-to resource for that type of work and top of mind for anyone that would need it. I think what I've identified since in my short time here, the challenge with that is sometimes it can be a long stretch of time in between when someone needs to engage services like that. And so we want to sort of have a drip campaign, I guess you'd say, over time, so the GSI is like, who do you think of? Who are you going to call? You're going to call GSI for this work. We don't want to be everything to everybody in terms of technology, support, and solutions. We want to focus on what we're good at and where there's a need. So we will see some marketing and promotion of GSI, maybe that you haven't seen before, over the coming months. We're going to be doing some exciting things there. And then there's a big opportunity with the CAPS system that you may have heard talked about yesterday with Roger's report. And if anybody in the room is interested in just being on a list to learn more about that, there's absolutely no obligation. This is a very unique opportunity. We are not in a sales mode. We are not, this is all obviously an association and a long-term relationship model here. And if we can make this work in a way that benefits as many as possible, that's going to be a really exciting thing to be a part of. We are still in the early stages of investigation on the technology part of that, as well as just interest among the community. But like I said, let us know if you'd like to learn more about it. Stay tuned. We'll be posting on Member Connect as things progress, and we're going to try to have some kind of a meeting in May, we hope. That may be an opportunity to get together virtually or in person to take a little bit of a deeper dive and see how we can make that work. So, Nate loves suggestions, feature requests, bug reports. We love to hear from people. It tells us that they're using our systems and they have ideas, and we do implement those as they come in. As of right now, I think we have roughly 90 items on the data mapper backlog. Those are feature requests and enhancements and little bug fixes and things like that. So we collect those. Those are important to us, and we do have an automated system now, so if you send an email to support@ncigf.org, that goes into our ticketing system. It starts a timer. We keep track of service level agreements internally as to when we respond to those things, and our team will allocate those or assign jobs to where they go within our system. And then we have a separate one for, speaking of separateness, we have a separate one for Guarantee Support Inc. So if you have an insolvency data project or you have a support request related to something that we're doing there, that address is support@guaranteesupportinc.com. If you don't remember those or you get those mixed up, don't worry about that at all. We will sort that out on our side. That's not a problem at all. Now, questions?
We're doing some exciting stuff. So this is kind of paired with the data mapper, but SUDS is basically getting a complete infrastructure replacement in Azure. And that's going to enable us to have automated tasks for like approving and rejecting files for C&Ds, and the moving of files from one directory to another, from the liquidator to the GA and vice versa are going to be instantaneous. I think our auditing is going to be easier. We're basically doing a complete infrastructure change and migration, and that's going to be kind of due in May. So if you'd like more details, let me know. But that's all we have for now.
We'll put that slide on Member Connect and more detail. And when we release, that's something else I'll talk about. As we do releases, we're gonna release notes just like you see on other software. We're gonna do a better job than the apps on your phone that just say bug fixes. We will have details about what we're doing and things that we've added and things like that. So, and in the case of SUDS, we will be doing some sort of kind of a recorded video walkthrough or some live sessions or things like that. We want to make sure we're not just dropping out something new and good luck. We'll provide plenty of support and training for it, but it's a big, exciting change.
We also have updates on that, but not really. I think the data mapper basically is getting significant updates as well. And paired with that, we kind of like to prototype what additional data we'd like to be able to send to the guarantee funds. We don't want to change the current standard. You'll be getting the same files you expect, but we're kind of interested in sending additional files like maybe a XML or JSON format for just a different format that you guys can open up and see what the new UDS format might look like. We're also interested in exposing more data formats for the liquidator. I think we kind of noticed Florida sending the different property address versus mailing address and the contact information for the claimants. We kind of like those forms to be available to them on the data mapper directly instead of sending Excel files and things like that. So I think it is all on the list. If you've got things that you want more accessible, we'd like it to be a part of the data mapper.
One of our core principles that Roger showed yesterday is accountability and visibility. And I think we'd be perfectly fine sharing our backlog of items on the mapper. A lot of it's really technical stuff, but I have no problem with sharing that on Member Connect or somewhere where everyone can see what we're working on and kind of the order of things that we're planning to do, sort of our roadmap. There's no reason not to do that, so be happy to.
Yeah, I think the short-term thing that I'm really interested in, where I'm personally excited for, is the scary big word, UDS 3.0. It's not 3.0, it's just, I want to, when we hit the submit button, we actually send UDS records to you. I'd like to play around with sending just an additional file that is in a different format. You'll still get the exact AFGs and Is as you expect, but an additional file with this new format so that you can take a peek at it and probably complain about stuff. So I just think that's going to be a really good opportunity for you guys to get involved in this process.
So it is an important element. It's not essential that the subsidiary generate a profit all the time. These issues of appropriate capitalization, and that's really what it is. It's a question of, is in this case GSI appropriately capitalized to conduct the business it's conducting? This is something that's not a snapshot kind of a look, 1 year, and if it looks like it didn't have enough capital for that 1 year, in other words, it lost money and was running out of money, all of a sudden you are no longer separate and you pierce the corporate veil. It doesn't work like that. It is over time. So we are in a good starting place where we've established the ability to build a small surplus. That gives us cover, quite frankly, if over time we go the opposite direction and GSI begins to lose money for a time. The question is, long-term, as we look at that, and the we that I'm talking about right now is primarily the board of GSI, secondarily NCIGF as the shareholder of GSI, but primarily the board should evaluate how the business is doing in terms of generating a surplus or operating at a deficit, compare that to the capital that that GSI has, and at such time as the board of GSI believes additional capital is necessary in GSI in order to continue to provide the services that it provides, it should make certain recommendations, which likely will require shareholder NCIGF approval to either get additional capital contribution from NCIGF or to generate capital in some other way from a bank or from some other third-party source. So it's an excellent question, one I was actually thinking of as I was saying the words. So I'm glad that you noted that. It's not a snapshot, it's over time, and the real underlying question is adequate capitalization to undertake the business.
Another question or comment?
Lee has a question.
I don't really have a question. I just wanted to go back to Annette's request and ask anybody that has specific requests or information that they would like changed or included to utilize that support at guaranteesupporting.com. That will go into our hopper of feature requests and give us something to shoot for when those are available. It'll give us the specific things that you want to see.
Or call us or email us or schedule a time to talk. We're happy to. So you don't have to use our ticketing system. You know, that's just a convenience. If you prefer to enter things that way, they're eventually going to find their way into our system, but we're happy to do that too. We don't want that to be a barrier or a hurdle of any sort.
I want to point out the importance of the distinction between what the board of GSI does and the reports that are given from GSI as a subsidiary to the NCIGF board. The concept is that GSI is something that NCIGF owns, and therefore its board ought to understand what NCIGF's asset is doing. That's that reporting, that performance reporting that Roger references. Beyond that, though, when we're talking about actual decisions about what GSI does, those are things which are the purview of the board of GSI. And that's essential to separating GSI from NCIGF. The requirement for membership is simply that the sole shareholder NCIGF appoints them. NCIGF may come up with a process by which it chooses to qualify those directors. Currently, I was just looking, and I'm not going to find it quick enough in my notes, but currently some, I believe, do overlap with the NCIGF board, but certainly not all.
And we try to keep it less than 50%, which I believe we are less than 50% right now of NCIGF board members on the GSI board.
And I think it's important to point out that we have a board member of GSI that has nothing to do with the Guarantee Fund at all,
Right.
other than he donates his time to us and he's an IT professional. So it is very different looking than
So the last thing I'll say is that we are very excited about the prospect of GSI and what the GSI is doing and the contributions it makes to the guarantee fund system and beyond. It's just important, I think, for us to make sure that if you have questions about this stuff, ask us. We have to think about it sometimes, but the answers are pretty clear when we do, because we really just need to get on with the business of GSI and how it serves NCIGF, and that's what we want to try to make a big step toward doing today. So thank you.
All right, let's have a round of applause for the panel.